Hey everybody, Gary with Basecamp Trading. Let's take a look at a 2-minute setup that we had in Crude this afternoon. The setup was right out of the small account intensive we did last week. And you can see on the 2-minute chart, Crude had been pushing up, and then it changed direction. You had the shooting star right here, and then we started making lower highs and lower lows. And then we went into the lunch hour, and we know that during lunch that price tends not to follow through very well, and we just started to go sideways. And then we put in this low right here, put in a couple bars all with equal highs right there, and started to head the other way. And so we put our channel in right there because we knew we were in compression at that point. And you can see that we just kind of chopped sideways, worked our way below the cloud. We had our moving averages in alignment, 5 and 18, 5 underneath the 18. We broke underneath the cloud, broke underneath the smooth 50 as we were breaking out of this channel. Now we pushed down, set up some bear flags, but these weren't very good bear flags. Just mostly sideways action, no real decent lead up to the breakout or anything like that. So these really weren't any good. As we discussed in the class, when we are breaking out a compression like this, we're looking for a nice push down and then a bar to actually break out and close underneath ideally. So there's a couple ways you could play this. You could either have taken the compression breakout because we were in compression for pretty close to an hour. So, and we know the longer we're in compression, the more likely that the breakout is going to actually lead to a move. So you had a choice right there. If you had taken the more aggressive trade, which is the actual break of support and out of the compression channel, that still wasn't a bad trade. It's good for about 3 targets or $300 per contract. We got the pullback, and this is the more conservative trade, and we had talked about this also in the class, that to avoid maybe getting taken out on a run on stops, take the breakout, wait for the pullback, a last kiss, and you can see we got a last kiss right here off of the support line, set up a bear flag. It triggered with a nice strong bearish trigger bar and then made a nice push to the downside. And this was a really nice push also. Triggered off of the reversal doji and the last kiss. See, this was a reversal doji right on a last kiss off of our support line. And we had this nice strong bearish trigger bar, and we just worked our way down. You know, typically when we're taking these flags, we have a couple ways we can manage our trades. We can either take a target, specific targets at a specific price or support or resistance line, or we can manage it with our Unirenko chart, which we'll bring in here in just a minute, or we can just do a 1-bar trailing stop, which actually would have worked out nicely. This bar actually triggered in at the bottom of that reversal doji at 32.30. Your risk was at the top of the bar, which is 32.38. So you had about 8 ticks worth of risk. You could even maybe place your stop 1 tick above it. You had about 9 ticks worth of risk. And if you were just trailing the top of each previous bar, so we enter here, stop goes at the top. As soon as this bar closes, stop moves down, stop moves down, moves down, moves down, moves down, moves down. Doing it that way, you wouldn't have gotten taken out till the top of this bar. And the top of this bar was at 31.47. The entry was at 32.30, so that right there would have been worth about 80 ticks. But this bar actually made a pretty nice push down. You actually could have got 100 ticks out of this. And anytime I get 100 ticks, I'm locking that in no matter what. If I get 100 ticks on a trade, that's $1,000 per trade. I'm locking that in. I don't care what else happens beyond that point. If I can make $1,000 on a trade, especially when I'm only risking $80 or $90, had an $80 or $90 risk on this setup, came down, and like I said, we were able to lock in over 100 ticks depending on how you trade it, but for sure locking in 100 ticks. Like I said, I get 100 ticks, I'm making sure that I lock that in, because anytime I can get $1,000 on a trade like that, that's a good profit, and that's an excellent risk reward. Again, we had 80 or 90 ticks, depending on how you put your stop. You know, even if you wanted to give it 2 ticks, you still had a $100 risk. $100 risk to make $1,000 is excellent risk reward. So, again, 2 different ways you could have played that. Here's how that looked on the Unarenko chart and how you could have managed that off the Unarenko chart. That trade was actually happening right in here. It triggered. We had this wick off the smooth 50. This is our Unarenko chart. We got the smooth 50. We have the 50 SMA, the 34 EMA, and the 18 EMA. We had this wick off the smooth 50. Now, this wasn't our entry. When that compression break triggered, it actually triggered right here on this wick bar out of the cloud. So right there was your 2-minute entry. And if you wanted to manage this off the Renko chart, again, we're just locking in 10 ticks as we go. That would have been good for 30 ticks to the downside, or $300 per contract. And then right here, this is where that pullback came and did the last kiss off of the support break. And you can also see that as that was triggering in, we had a Trender Pro 2.0 entry signal right there. And so this trade, I mean, Trender Pro just kept you in. There was absolutely no reason to get out of this trade all the way down. I mean, you never even got a close off of the 18 till down in here. Now, you were probably locking in profits down in this area, because again, by the time we got down in here, we were up 100 ticks on that trade. So you're locking in profits down in here. If you got out this wick off the 18, you wouldn't be wanting to get into this right here, because at that point, you're buying really the bottom of an even larger move than that. You figured the high was all the way back here. By the time we get all the way down here on that dumping crude, that's 150, 160 ticks. You do not want to be selling the bottom of a 160 tick run. So while that would have locked you in actually a couple $100 per contract, so not a bad setup, probably not one that you're going to take. Because again, or at least me personally, I'm not going to take a trade that's off the highs, 150 ticks. I just don't want to sell the low of a 100 plus tick run. I mean, I'm looking to take profits at 100 ticks. I'm not looking to enter there. It did push down. Like I said, you could have got some profit out of that. You for sure would have been out at this point. You can see you were making divergence on MQ momentum, so you for sure would have been out on that reversal bar. And you can see after that big long push, we did get divergence that ultimately led to a reversal back the other way. But again, a nice 2-minute setup in crude right out of the class from last week. Could have managed it off the 2-minute chart the way we taught you, or you could have converted to the Unarenko chart, managed it off the Unarenko chart, which is actually the way I like to manage my trades. But either way, a nice trade in crude this afternoon.